What's up, everybody? Welcome to this episode of Funding Climate Robotics. This is a very exciting panel discussion. It's a very important one, too. One that I moderated last year. I got the privilege of doing that, so super, super stoked. Um, and I want to make sure, though, before I keep diving, because as you guys know, I can dive like crazy. Are we still on? Because everything kind of keeps changing in my viewpoint here. Are we looking okay?
Yeah, it's good.
Okay, rock and roll. So yeah, I am my name is Ben Maitland-Lewis. Please don't call me Benjamin. Most people call me BML. And I am currently the director of startup banking and founder success at SVB. Been here for a little over 2.5 years, was a client here for over 15, was a founder for over 23 something years. Here, I focus on supporting startups from the inception point through the Series A inflection point. So I would liken it to like pretty much hand-to-hand combat. It's highly tactical. It's always about raising capital, figuring out the where the markets are at, how to get customers, figuring out everything inclusive of like co-founder dynamics and you name it, right? So it's very tactical. It's everything that we do. Prior to that, though, I was a founder forever and a day, sold a couple companies, failed at a bunch of others, invested in over 30, and just am a forever learner, I guess. Retired musician. So I came in a very weird spot because, careers are non-linear. Hyper fascinated about the climate space, always have been. And all of it, all encompassing, from clean tech to climate tech to robotech to marine tech and everything else. And within that, robotics over the last few years has continued to become and play a more important role. And funding for that couldn't be more important. It's a big one because, like, obviously we're dealing with both sometimes software and hardware, but definitely hardware first. And it comes with a huge capex and typically a longer time for there to be any type of return on investment or revenue generation and a few other things. So it's really critical that they're able to find capital to accelerate their ideas and initiatives. So I'm excited for this conversation today because we've got some really awesome people here who we're going to first run through some introductions, keep it nice and top level. I'll give you guys each 2 minutes to run through that. Then I'll fly back, answer a couple questions to help you guys talk about a little bit more about what you guys are really focused on, how you guys are tackling it, and what's keeping you up at night. And then I've got a couple other burners on the back end. So if that sounds cool, I'm going to float into this and we're going to carry on with this session. Golden? Golden. All right, Edgar, since you're immediately to my right on this awesome video, you're going to start, buddy. Give us 2 minutes of your background. What's going on? What are you working on?
Perfect. Thank you very much, Ben. So yeah, I'm Edgar, calling from Paris in France. Um, Working as a venture lead at Marble. And so long story short, Marble is a climate deep tech venture studio where we incubate and finance climate deep tech startups. So a bit
Awesome.
different to a lot of the venture folks and venture funds. We have to incubate the companies at first. And our thesis is really the climate crisis and what are the hard climate problems that we ought to solve. And in solving them, what are the best approaches and the best people to do so. In the past 4 years of operation, we spun out and funded certain companies. So companies ranging across different verticals, from making hydrogen in a way more cost competitive way to assuring a supply chain for copper in the Western world, to other companies in other sectors. And yeah, prior to Marble, I'm a material scientist engineer by training, and I spent the past 8 years of my life mostly incubating and investing into early stage breakthrough technologies. I'm super pumped to be here and to speak about, yeah, one of these most important topic around funding climate robotics. And yeah, over to you, Andy.
Yeah. Dude, that's awesome, man. Welcome. We're super happy to have you here, Edgar, and excited to learn more
Cheers.
too, man. And I think it's awesome that you guys are both finding these companies, incubating them, and also helping them connect them with capital to further commercialize and develop with R&D and stuff. So like that's awesome. You guys are actually fighting the good fight on multiple fronts. So I'm excited to kind of dive into that a little deeper in this session so people can learn a little bit more about what you do, how you do, why you do, and then kind of where we can connect those nodes. All right, Andy, we're moving on to you, my man, in a nice soundproof room. I'm vibing on the
Well,
acoustics.
with the soundproof room that we've made ourselves.
Oh, nice.
So I'm Andy, partner at SOSV, specifically with the HAX program at SOSV. SOSV's venture capital fund. We invest in early stage companies solving problems as it relates to human health, planetary health, and industrial independence. We're on our fifth fund, which is a $300 million fund, investing $250 to $500,000 in companies as what is typically first institutional money into those companies. Our
That's
sweet
awesome.
our sweet spot is investing into PhDs, postdocs, spinning research out of universities. And then HAX, which is the physical sciences program at SOSV, explicitly focuses on exactly that, companies leveraging physical sciences. So think physical AI, robotics, material science,
Yep.
chemistry. And I'm based in the New York City area, specifically in Newark, New Jersey, where we have a
Yep.
large 35,000 square foot facility. I'm going to turn my screen a little bit here to
Sick.
give everybody a taste of what's out my window. But I hang out with robots all day, and other cool chemistry science stuff happening in our facility. We have a machine shop, 3D printing labs, electronics lab, and a chemistry lab in this facility, and we're really helping them accelerate the advancement of the technology after we make an investment. Uh,
Yeah.
my personal background in the space, so I'm a chemical engineer by training, started my career in the energy industry, traditional downstream oil and gas, and then in 2015 pivoted over to a startup in the carbon capture utilization space, where I
Totally.
was the lead engineer on a first of a kind facility that we built in China, a big 250-ish million dollar capital project in that sector. But yeah,
Yeah.
that's us.
That's awesome. I mean, also congrats on being on Fund 5. I didn't realize you guys were already there, so that's huge. And like the denominations of checks that you guys are cutting are such that with the size of this fund, you're going to have a massive impact across like a slew of different companies, which is awesome. And 35,000 square feet, that's awesome. That's you have all the toys there for people to be able to create and design and kind of figure things out and tinker and stuff, which I absolutely love. I was over at the WPI Robotics lab a
Hmm.
few months ago, and it was the same thing. I get on campus, there's like a little robot cruising around delivering drinks and going in this thing. It's massive. It's so cool. I'm a big fan of that because again, you guys are helping people like not just get together, help with the capital, but then the physical resources to
Mm.
help them actually deploy, or not even that yet, but like R&D and figure things out. So that's really, really cool. I'm gonna have to make it down there for sure.
Yeah, come visit.
I will 100%. I'm based in Boston, so I'm dealing with a
Okay.
lot of like the guys coming out of MIT and Harvard and WPI and stuff that are all kind of spinning this out, very much matching your ICP, which is really cool. So first, starting off by just saying thank you guys for doing what you're doing, man. It's awesome. It takes a village, you know. And as you guys know, it's pretty lonely being a founder sometimes, right? And like you're constantly trying to find resources, and you're also constantly, I would almost say, like, you know, like you're always pushing the boundaries without a lot of resources. And so, like having someone like you guys in the mix is what really helps accelerate innovation in the space, which is what's really needed. So thank you guys. I'm just starting there. So let's take a couple minutes to dive deeper actually into those areas that you guys are doing. So Edgar, I'm going to flip it back over to you. Are you in the UK right now? Where are you at?
In Paris, in
In
France.
Paris? Okay. Ah, bonjour. Hey, comment allez-vous? Hey, je parle français un tout
Bonjour,
petit peu.
everyone.
Just a
Ah,
petit peu.
super.
I'm German, so French kind of just trickles in across the vibe, you know what I mean? Could you explain a little bit more related to Marble of like the types are there specific kinds of companies that you guys are looking for? And what I mean by that, like, are there specific verticals? Like,
Hmm.
are there specific stages that are sweet spots? You know what I mean? Kind of walk us through that a little bit more and really kind of help us understand where Marble fits within the ecosystem.
Yeah, with pleasure. I mean, sweet spots for sure, but crucially, I think we go for what is climate and deep technologies. And so, because we are a venture studio, we want to incubate those companies at first. And so, for us, the starting point is always to be defining what are the core pillars and what are the core problems that we want to solve. And so
Hmm.
those problems are all related to the climate crisis, and there are different entry points that then we scope internally, defining specifically what is the bottlenecks, what are the main ways to eventually alleviate for those bottlenecks, and then eventually finding the right founders to build those kind of companies. And I mean, over the certain companies that we have built so far, those are mostly quite hardware heavy deep tech companies that, as you pointed out, Andy and Ben, are really like technically differentiated, come with always or oftentimes some scientific background and technological background of the founder that we can tap into. But crucially, I think, and especially in the robotic space, it's even more important to solve for something that really matters, hence the problem definition.
Mm.
So yeah, and obviously it's finding the problem, it's having something that is a differentiation technically and technologically. And finally, it's also about betting on the right people, the right founders and co-founders and the right team to eventually solve for those big challenges that we face.
Totally. I mean, especially at this stage, you guys are really investing in the founders. I mean, can they do
Yeah,
that? Can they pivot, et
exactly.
cetera? Out of that, and I guess this is a quick open question to both of you guys, but like, where do you guys place like coachability on founders on a level for you guys before you make an investment and kind of do everything?
I mean, I think very high, definitely. It's, if not one of the most important defining parameters. And I think it's about the ability of someone that is coming from a very specific system, notably the academic system, or someone that is a repeat founder, yet wants to found again in a deep tech or climate area, to listen to feedback, to listen also to his ecosystem or her ecosystem, and to ensure that they work empathetically also for a given problem and for the given set of customers that they face. So I think coachability is paramount. And I would say that in addition to all of the other criteria or parameters that we look for, coachability is definitely top of mind.
That's awesome. It's good to hear. The human side is important, right? Andy, what about you?
I mean, I agree with that. Coachability and just the founders in general are a huge part of the assessment at the early stage that we're investing in. I think the stage we're at is very similar to the stage Marble's at. So no, not a whole lot to add there.
No, that's awesome. It's just nice to hear that that's an approach there. And I think it's important for the audience to hear too, right? Like one of the big things about this is also, especially for where you guys sit, is almost like lifting the veil about like how you guys think and how you guys operate, right? It's so easy for founders to get into like, I mean, even if they're incredibly smart at what they do. I mean, I was just with a PhD 2 weeks ago, right? And, when you're in an environment of nothing but PhDs, you kind of look down on your own PhD. You're like, it doesn't matter. Everybody has one. But in reality, I'm like, no, man, you need to put that up there because you have a PhD very specifically in this area. And like, you are the authority and you have published white papers and you've done all this stuff, not to mention what you've already done with the company and everything else. Like, you should be proud of that. And I think sometimes that gets lost. And so it's always part of this is just also like, how are you guys thinking about things to help the audience understand how to best approach you guys, right? Because a lot of times where I'm at too is just kind of like, all right, Andy, yeah, you guys are flush with a new fund. Okay. Oh, you must have money. I'm going to knock on Andy's door and be like, hey, give me money. But you're not understanding the approach and how Andy's looking at the world and looking at the founders and what makes them click and drive and really dialing into that. And so coachability, I think, is really important because it's very easy to be like a thick-skulled, stubborn founder. To an extent, you want that. Like in an extent, you want that, chutzpah, right? But you want them to be coachable and open to other areas, especially where you guys are at. You're not in their trench. You don't have trench foot. You're able to see much wider. The aperture is much clearer. You know what I mean? So it's important to be able to be open to being coached because, again, you guys are doing it with like pure empathy and like intention, right? I mean, you're here to help them, so be open to it, right?
I think it also ties back to some
Yeah, go ahead.
extent about like not every PhD should be a founder, right? And I think that's something that we often say is that obviously there are some specific traits that make founder, and it's important to call them out and to make sure that we work with those people that also want to commercialize their technology, but also want to do it for the big problems that they ought to serve.
Yep. I
I
couldn't
think
agree with that more, dude.
I think one thing like I wish founders would think about more as they're coming to speak to investors is like actually every meeting I have, I want to be the next investment I make, right? Like that is the
Me too.
lens that
Yep.
I'm approaching it with. But I have to make the assessment in the process, right? So like, yeah, whether you're at the beginning of a fund or at the end of the fund, the investor is wanting to give you money. That is the reason they got on this call. They're hoping that you convince them that you're the person to do whatever it is that you're claiming you can do. And part of that assessment is pushing back, checking coachability and things like this. But I just think that's an important mindset for founders to have is like, I am trying to give you money. I want to give you money.
Yeah. And I also need you to make me money, right?
Correct.
It's a mutual win-win, right? Like if the stars align, then it's an incredible partnership. And individuals like you and Edgar are going to be able to help accelerate or provide more doors for them to walk through and heighten their chances for success. You know what I'm saying? And in the process, boom, it doesn't take a lot of ink to write a
Mm.
check, right? And I think Arthur Rock said that like way back in the day, right? And it stuck with me because I also made mistakes back in the day too. There's this balance between you need the money, so just get the money, right? But then
Mhm.
there's also like you need the money, but the money only goes so far and it's going to run out. So you actually need the value and the resources and the connections and the guidance beyond the capital. I would argue equally as important. We are speaking about robotics here, so that takes money, but everything else above that. So
Yeah.
that's really good to hear. And also, Edgar, man, I agree with that sentiment of also not everybody should be a founder. Like being a founder is incredibly hard. It's pretty lonely. It could be epically rewarding. It could also be like epically tragic. The worst though
Mm.
that's ever going to happen is that you're going to fail forward and you're going to like learn a ton, expand the network a ton, position yourself better. Like there's nothing bad that can come out of it outside of a couple private things. Like you could put off your personal stuff, you could be sleeping in the office forever, you could do all these other things, which we've all done, man. I mean, I'm 43 and I'm still playing catch up even after a couple acquisitions because sometimes the way that the pennies fall doesn't always end up correct, you know what I mean, or whatever. But like the point is that I also wouldn't, like, I'd
Mm.
do it all over again in a second, you know what I mean? But of course, if I had hindsight as I have today, I might have made a few different decisions, but I don't regret anything I did. You know what I mean? But also, not everybody should be a founder. Like, founders also need very strongly convicted, highly talented people to support them in bringing something to life. And if we have nothing but founders running around, then whatever. So you need to find what your own personal why is and either go build it or find somebody that's already doing it or developing it and go commercialize it and like figure out where
Mm.
you fit in that realm. You know what I'm saying? But at the end of the day, it takes a village, right? Community is what you make of it. And like these solutions aren't going to come out from one individual over here and one individual over here. It's going to take all of us working together, both capital, ideas, commercialization, R&D, et cetera, to make this happen, and actually have, inflict really strong positive change
Mm.
in a world we all share. So now we're already kind of on funding a little bit and kind of founder dynamics around that, et cetera. So like, could you guys both kind of give me like a vibe on, what makes like a climate robotics company fundable right now, right? Like explain them that.
I mean, I think my background's in energy, and
Yep.
the energy world is confusing at the moment, right? If we try and think of like what energy looks like for the next 3 months, 6 months, 12 months, 24, 36 months, right? If we are putting that sort of like timescale on it, really confusing what the future looks like. But if we start looking 10 years out, we know where we're going. We're building more energy. It's going to get more efficient. And we have a sense of like what that energy mix looks like, wind, solar, batteries, etc. And so like that's what I'm looking for is the founders who are thinking about the 10-year window, not what opportunity can I chase in the near term. I think that's especially true at the stage that we invest at, pre-seed seed. If I
Mm-hmm.
see a pre-seed company coming to me telling me they're chasing the data center bottleneck, I'm like, you won't be there. You're not going to catch it. You're too late. And so what I'm thinking about is founders who are thinking about what the future looks like when they're ready to be commercial and they're ready to deploy, and really focusing on those 10-year horizons and not getting
Yeah.
swayed by near-term politics, discourse, whatever it might be. And that's very generic and very high level, but energy's so big, climate's so big, like I don't know how
Yeah.
to be more specific than that at the moment.
Mm.
Totally.
And
That makes
I would
sense.
also add that I think there is something that notably for robotics company in climate is quite paramount is the reliability and the deployment in the field, right? From the really early stages to ensure that customers have that specific workflow that is working and to ensure the outcome of that specific workflow with a robot.
Mhm.
The number of robotic companies that I've seen who were able to really push for that specific reliability at the earlier stages was some of the most amazing companies amongst all of the companies that we have seen. And I think this, yeah, reliability and deployment in the field is really paramount in the space of climate robotics.
Hmm. That's awesome. That's good. That's good viewpoints. We have one question that kind of tears off this that I want to jump into though, which is also like it's related to like the capitalization and the
Mm.
commercialization of some of these things. So of course, like Andy, you just mentioned the 10-year horizon. Edgar, with you guys with kind of in this inception phase too, like you guys are looking at very long
Mhm.
cycles here. It's kind of akin to life science in a sense, right? Where you're just going through a lot of these R&D things, testing, deploying things in the field, figuring things out, and then figuring out how to commercialize, where to deploy, et cetera. Like, you know, what like like how hard is it? I guess where does the majority of the money come from in the end for a lot of these like, climate robotic solutions and stuff? Is it through government incentives and different municipalities, state and government funded projects? Does it, at what point does it come from the private sector or commercialized company? Like, can you explain those dynamics a little bit?
I mean, the early stage is probably coming from venture dollars. And I guess, when I'm looking at an investment, there are many different sources of the capital. When I'm looking at an
Yeah.
investment, if they're reliant on government dollars or other forms of like concessionary capital, that is not ideal from my perspective, right? I want something that is a little more certain, a little more stable. My ideal answer to where's the money coming from, it's customers and revenue, right? Like that's what I want to see, customers and revenue. Let's scale this business on revenue. I don't want to see you raise a $50 million round, a $100 million round. I actually don't think that's like a healthy business if we're having to pour that much capital into a company at like a Series A stage. Like I'd much rather see that early revenue growing into revenue, getting to break even, and starting to accelerate growth with revenue. And once we've demonstrated that product market fit, let's raise some venture dollars to really put our foot on the gas. But I don't want to see us raising 50 million, 100 million, 500
To
million
figure it out.
for technology development. Yeah.
Yeah, 100%, man. I mean, we're in the day right now where like sales cures all. Like, I was mainly raising between 2014 and 19, and during that period I was turned down a bunch of times because we weren't burning fast enough. And that was counterintuitive to me at the time. I understand why like that space was doing that, but I also just didn't think it was like the right way to build a business. And we saw what happened with a bunch of companies that raised huge rounds and then died, because they just were busy building the polish versus like really building with their customers and making sure that retention and that they were actually solving that problem.
Yeah, that much
So
capital is a risk in itself.
totally. They're just going to splash it on stupid stuff and then need more capital then, and then you can't make the numbers work anymore. It's a whole vibe. So now where we are is like, we're in a world where like sales kind of cures all. And even with robotics, if you can't fully get there, like at least figuring out ways in which to get as far along to prototype as you can, leveraging the resources that are there. I mean, look at you guys. Both of you guys have facilities where you guys are incubating and providing these tools and resources from 3D printers to the labs and et cetera, like to get there. And so I think what you guys are doing is mission critical for that. And then I think from there, it depends on, I guess, what the beachhead is for commercialization. At that point, it could be government, it could be municipality, it could be private. And I think you guys kind of work to figure that out as you get there. So that makes sense. Capital efficiency, I think, is a really big one, especially today with vibe coding and everything else. It's amazing that we've democratized access to tech, but now everybody's a founder, but nobody really has a defensible moat. Nobody's doing actually the business, and you got to really get there. So, okay, that makes a lot of sense. We have another question that just popped in about like underrepresented founders entering the robotic space and succeeding. Would love to get your take on what you're seeing in the market for underrepresented founders, and if you see that happening. I'll give a quick anecdote on my end. Like, I work with probably a few hundred founders a week. and I do a ton of events and everything. Last year I did 90 events, right? I'm just always out. I'm always trying to create these opportunities for individuals. I'll confidently say that probably 65 or more percent are actually underrepresented founders building, which makes me really stoked, right? I think what the question is really getting to is for underrepresented founders that are coming from different parts of the country that aren't, in these mega labs, et cetera, is there a pathway for them to get into robotics? And B, like, do they have chances of succeeding? Have you guys seen this happen? What programs are you guys doing to encourage this or to spread the, exposure or awareness of this industry to underrepresented communities? Like, could you guys touch on that?
Hmm. I mean, happy to start off. I think they have as much chances to succeeding, if not more actually, than pure play robotics founders. I would argue that those are the same traits that any great founder shares, which are that they are extremely ambitious, that they have a very huge vision to actually share and a way to embark the rest of the ecosystem with them, and that they also have innate execution skills or a way basically to enter that specific market with a very specific workflow that they want to address. And so that ambition, vision, execution are the same traits for any founder, at least to my liking. And I would argue that someone that, yeah, just wants to build something and solve for a major problem that is already existing and where robotics actually is a mean to this end is is very indicated to found a company in that space. So, yeah.
Yeah, I mean, at SOSV and HAX, we're always looking for opportunities where other people aren't looking, right? And so I think that's kind of where we start. We tend not to be focused on the ecosystems that have the brightest light shown on them. And so like that has played out in our portfolio construction and how we've built our portfolio and what the founder profiles look like. We are evaluating founders and companies on their merits. What that has ended up looking like in our portfolio, for example, about 35 to 40% of our companies have a woman as a founder in our portfolio. That number is not at parity with the population yet, so there's work to do there, but it is light years ahead of where the rest of the venture funding ecosystem is, which I think statistics are around 3 to 5% of venture dollars are flowing to women-led companies. So it's something that we're thinking about, it's not something, I guess, it's something we are thinking about. It's something we're monitoring, and something that is important to us. But we're assessing these companies on their merits, and like as we assess them on our merits, we tend to get a very diversified group of founders in our
Yeah.
portfolio.
Yeah, I mean, I'm inspired by it, dude. I mean, obviously in Boston, I'm surrounded by, you know, the waspy of the waspy, like in certain institutions, like, and then everybody else that flies in from all over the world to be a part of this ecosystem, And I sometimes it's a mentality, sometimes it's a work ethic, sometimes it's like it's all mixed in together. Um, I think what's important to note, and for anybody that's having that question in their minds and things like that, is individuals like us, the three of us on this call, and how we assess founders and deals. It's all about the founder, and the idea, the grit, the passion, the purpose, your why, your ability to execute, everything else. Like nothing really else matters. Like we don't really look at pedigree and things like that. And in fact, if your pedigree is like super crazy, we even kind of, at least in my opinion, leverage that as like an orange flag just to kind of look out for. Like, were they always given things throughout their life? Or they're gonna actually like fight for this? Like, when you have to have those conversations, right? Everybody wants to start a company. They don't realize it's gonna take 10 fucking years before you actually get somewhere that you really feel proud about, because nothing's really gonna be enough. Because once you like get this one win, it's like that's awesome, but we have to get this one, and then we have to get this one. And then, oh, by the way, we have a vendor, especially in the world of robotics. I don't know like what those vendor timelines are, but maybe they're going to do net 90, net 120 or something, or you have to deliver first before they pay, but you have payroll. How do you do that? You know what I mean? Do you make payroll but withhold taxes and then have to figure that out later? Or do you like bypass payroll and be like, guys, we got to wait a week? I mean, dude, there's a lot that comes in with it. And so really having a compelling why is what's going to allow you to carry through those dark days, right? It's like, that Winston Churchill quote, right? If you're going through hell, keep going. And honestly, that's what building a company is like. It's the most rewarding experience you'll ever have, most of, people in your life, but it's rewarding because of the pain, honestly. And look, I've officiated 11 weddings in my day. They've all been for my employees, like, because I'm just very close to them. You know what I mean? Because we're in this together and we're building something that doesn't exist. It's hard. You know what I mean? But like, talk about purpose, man. That's purpose. You
Mm.
know what I'm saying? All right, let's talk
And
about
I
a
think also
couple.
to some extent,
Okay, go ahead.
there are some the right moment is probably right now for also funding robotics and climate. I
Yep.
mean, notably given the barriers to entry that are falling down, both on the cost of hardware for the actuators, for the lidars, for the batteries, but also on the specific technological capabilities that are present, notably for closing this seam to rear gap, but also on the specific models, the VLM models that are getting
Yep.
more capable than ever. I think the barriers to entry are lower than ever. And so if someone wanted to enter the climate robotic space and to found a company with that great that intensity that you mentioned, the founder vision execution trifecta that we mentioned, they have all of the capability to do so.
Totally. Um, you bring up a good point. I mean, so I think if you're sitting in the United States, you're sitting with a lens of like, is this a good time? Is this not? Right? Are we pulling back on, certain regulations, or are we adding new ones? Are we, leaning more into fossil and fracking and away from, wind turbines and, tidal energy? Like, do you know what I mean? So there's a lot of that. I think around it, that's on the very big macro perspective of like where the policy is going. What are we doing? Is there going to be a wedge for this, that, the other? But then if you look underneath that layer, I think the opportunities are like limitless. And I
Mm.
think they keep expanding, right? It's like even with like, the all the eyeballs recently on like the Artemis 2 mission, right? And everybody's finally looking at space again, right? And we're realizing, holy shit, we also need robotics in space for us to even get farther, for us to even do what we're doing or increase the velocity at which we do things. You know what I mean? We can't do it alone on our human touch and reach. We actually need robotics up there doing things, etc. So it's going from the oceans to the, to the ground levels, to the factories, to the supply chains, to humanoids,
Mm.
to space. And at WPI, I don't know if I'm going to get in trouble for this because it might be like classified, but I mean, I even saw robots that would go like up in like rain gutters and clean out things and figure out and map things. I mean, it's just I think we're only scratching the surface. And ways in which to do that, both like, where there's sustainability baked in, there's low cost of, actual fossil fuels and energy and things like that, I think are critical. And then figuring out how we can make mechanisms for those to be as, interchangeable as possible, maybe as modular and commingling in existence would be incredible. That way we're not all in silos and all these other things. You know what I mean? But like related to that, actually, like would love to hear from you guys what you guys are seeing, like from your seat right now, right? Like where's the real customer pull coming from? Like for what, what verticals, I guess, have like genuine demand right now that you're seeing.
Yeah, I mean, so I would say the major driver. Okay, so if I think about like macro trends in the world, and they've been macro trends for a while, they've just accelerated in like, let's say, the last 6 months, is the fracturing of global supply chains, and sort of deglobalization, if you want to think about it that way. And so, what does that mean for robotics and climate robotics? I think it means reshoring of manufacturing, and that is an area that I think is very, very interesting. And we've made several investments in the space.
Mhm.
Specifically, I'm thinking about some of our like textile and fashion investments, utilizing robotics as it relates to that supply chain. Most of that labor force has been concentrated in low cost of labor countries, primarily in Southeast Asia, for example. Uh,
Right.
and in order to compete in the US and reshore that supply chain, the only answer is robotics, It's also a massive climate problem. That is one of the highest polluting industries in the world in terms of carbon emissions. We
Totally.
go through fast fashion and we're constantly disposing of textiles. Like something like half of the clothing that ever gets produced actually never makes it onto a person. They overproduce like the sizes. They don't produce the right sizes. A whole host of other
Jesus
challenges
Christ.
around that. But I think about that. I think about advanced manufacturing as well, which there to me, there's a very clear climate story in advanced manufacturing. And so those are the areas that I'm super excited about. I'm less excited about, as I mentioned earlier, like early stage climate companies chasing things that are hot at the moment, like data centers and some of the other applications.
Totes. Totes. Edgar, what about you?
I mean, to complement, one of them that I'm really excited about is the construction industry, specifically for some of the reasons that Andy mentioned, the labor shortages, but also that currently it's one of the major drivers also for building more. And we are thinking about one company specifically that where the starting point for us was if we wanted to break down basically all of the capex of building a given construction project, and specifically for prefab, for instance, where is that capex coming from, and what are some of those same operations that are today mostly manual, and where we have the most asymmetry between that huge capex requirements and at the same time the manual labor. And
Totally.
we landed onto that specific construction company for prefab, robotic construction company for prefab. And it's, as you mentioned, I think it's one where there is the strongest customer pool because those are actors that are looking to find new solutions where they want a given outcome that is guaranteed for specific pricing, and where robotics companies today with the current capabilities have a way to offer those.
Yeah. Yep. Totally agree. How do you guys like on the investor side, right? Like what business models for you guys like actually hold up to like your kind of investment scrutiny, right? Like certain investors operate on like SaaS like returns, you know what I'm saying? Like, but within robotics, like, how are you guys evaluating that? Like,
Yeah.
yeah,
One of our successful founders in the robotics space said something to me, and I'm going to paraphrase roughly, but it was selling hardware at 80% margins will never go out of style. And like kind of hard to argue with that, right? Like
right.
that is a good business. Everybody wants to be a RaaS business, and like the
Right.
reality is most customers don't like a RaaS business model. Um, so it's a really hard sell. Sometimes it does fit in certain verticals and certain spaces, but like I think if you're going into, I would say construction, for example, depending on who your customer is, like a general contractor doesn't want to pay a recurring subscription for the robotic solution
No.
providing them. They want to buy that hardware, and maybe there's a small software license associated with it or something like that. But
Yeah.
I think like a lot of what we're selling is capital. A lot of what we're selling is hardware in the robotics space. And as much as you can
Mhm.
move that to recurring is ideal, but it's not as easy as every early stage founder is telling me it is. It is.
That's right. You know, we're going to come in here and then we're also going to be their operating system and then we're also going to do this and we're also going to do that,
Mm.
right? It's like, dude, just get the node in there and solve that problem. Because yeah, we're seeing a bunch of different business models, right? Is it like data? Is it, you know, outcome-based contracts? Like obviously the RAS robotics as
Mm.
a service vibe comes up quite a bit. And so just yeah, I was kind of intrigued by what you guys are seeing and what actually ends up being real in that space.
Mm. And I think it really depends also on the type of product that eventually you have, obviously. So
Totally.
you guys covered, I think, the most common business models, and all of them are related to obviously the product that you have. And also we see increasingly more and more novel business models that are akin to roll-ups or to other type of financing plays that are quite exciting as well, because those are different type of ways to finance those kind of
Mhm.
assets.
Yeah. And like, what about surviving like the valley of death, like between like seed to A? Like, you know what I mean? Now we've gotten a couple pilots, maybe some design partnerships out there. We've got a couple prototypes, but we haven't done mass like manufacturing yet, right? We've raised our seed. We're starting to like really prove out a couple things, et cetera. But like the path to Series A still seems pretty far. Like, what are some of those triggers that get you to feel that this company is now ready to go raise that next round?
I mean, there's no substitute for revenue, particularly at that stage. And whether it's
Sales
real,
cures all.
yeah, whether it's realized or booked or you can see a pipeline, right? Like I think
Yeah.
it depends a little bit on the exact nature of the solution and the exact nature of the vertical you're in. But like th at that point, that's what I've got to see. I've got to see demand.
Yep.
However we talk about demand.
Yep. Makes sense.
Completely aligned.
Cool. All right, guys. Like I think we're getting pretty close here to the end. I do have two quick questions. Well, we'll try to make them as quick as possible. One question is like, how difficult do you think it is, honestly, for PhDs to go from the academia world into, this industry and startup world, basically spinning out the IP that either they've created or that is already shelled at the institution? Um, they've got the brains, they got the smarts and everything else, but can they make that transition to, being a startup founder, commercializing, going to market, being forward facing, etc.? I've seen that happen very successfully, even with a little bit of coaching. But what are your thoughts? I mean,
I
Andy,
think
that's all you
it's
invest in.
important to do it. Yeah, I
So
mean,
yeah, to
I
answer
think
that
it's,
question, that's all Andy invests in.
Yeah, but yeah, I mean, I mean, we have made a bet that PhDs can make that transition. We are screening the individual, obviously as part of our investment, but our view is like, look, if you've done all this research, you become the world expert in it. You have some capability that nobody else has, and what we're trying to assess is to think about this a little bit more mathematically, like we're trying to assess the slope of the individual, not where they're currently at, right? And can we help them level up with some coaching and some resources behind them and getting them in the right environment? So, yeah.
That's a good takeaway, dude. I'm gonna actually highlight that for a minute because again, right, like when you're in founder mode and you're in pitch mode, you're like, here's my pitch perfect deck. Here's like my perfect models and my numbers that I'm assuming, which we all know at that stage anyway. It's like licking your finger and putting it up in the air. Like, it is what it is. You're measuring the slope that's in front of them. I actually really appreciated that line, right? Because oftentimes it's like, holy shit, am I going to fail or succeed based on exactly where I am right now? And in reality, where you are right now, like is just, it's not what we're focusing on. We're focusing on where you can be. I'll never forget the day I was with Paul Graham, YC 2015. He was still there. I was at YC, and he was like sitting with his hands like in his head like this or whatever, and I was like, dude, are you okay? Like, what's going on? Did something happen? You know what I mean? Do I smell? And he was like, no, I'm just trying to imagine what the world will look like after you succeed. And I was like,
Okay.
yeah. That's empowering. I like it. So,
Yeah.
but that's a good point. I wanted to highlight that, right? Again, we're always forward looking, right? It's like, I know you're here now, obviously together, right? It's like 1 to 1 equals 3. We can be better. I'm looking at that curve and where that is. And so that's a really good attitude as well to take in from a founder to investor. Again, it's a partnership. It's a forward motion. The gentlemen here on this call specifically are looking at 5-10 years in the future of where this could go. And so that is a perspective that is also really hard to come by as a founder because you're so stuck in what's right in front of you, and oftentimes you have horse blinders on. So it's critical. And I would say, like, to close this out, like, what would be the best way for people to engage with you guys if they have something that they think would be awesome for you to consider? Do they go to the website and submit something? What's the vibe?
I mean, find me on LinkedIn directly, Edgar Ke,
Cool.
and then reach out.
Cool. Andy?
Yeah. We have an application on our website. The website is hacks.co. Or you can, send me a note on LinkedIn. I manage our intake along with our analyst who reviews our application. So, we're pretty, we review every single application that comes in. We don't respond to every application, but we review them all.
Yeah, that's awesome. And also, quick tip for founders that are out there listening to this right now. Like, feel free to hit me up as well. I'm happy to support you in carving out how to kind of figure out the investor motion and how to do things. But a quick tip here is like investors are here to help. They're here to support you. They want you to win. They want to be a part of that if you're winning. They want to help you win, right? They're here to move the needle forward. But they can't move it forward for everyone, right? It has to be a certain fit, a certain thesis, a certain thing. That's totally cool, right? As a result of investors in general wanting to be useful and supportive and like a critical piece of the ecosystem, they're always open to have conversations with you. Typically, I'm not like soliciting this for you, Edgar and Andy, but in general, like if you're coming at an investor with like, hey man, I want to show you what I'm working on, I would love to just get your take on it. More often than not, they are totally down to take that conversation because the pressure is alleviated because it's not like, oh, you're an investor, I need money, and then they have to be in this motion. Instead, they're approaching it with like a helpful motion, right? And then in that case, in that conversation, you do a couple things. One, what's your vibe on what I'm doing, man? Like, what am I not seeing? What are you seeing that I don't see? Just fucking tell me, right? Two, who else do you think I should talk to about this and get some feedback from? Three, can I keep you informed? Can I just keep in touch, man? Like that's it, right? Then what you're doing is you're building like this unofficial like investor like monthly newsletter, right? Or whatever, right? And you're keeping them abridged to your progress. You might drop an ask in there. They may or may not respond. Doesn't matter. You should always have an ask in there. You know what I mean? And then just keep doing it. And then at some point, you'll get to that inflection point where you can flip the script and be like, yo, Andy, Edgar, actually, we're going to open around pretty soon, man. I'm interested in chatting with you with that lens. Are you down? And then at that point, they already have a couple months of measuring your tenacity, your persona, like the company. They can turn around and play telephone to their partners in the firm much better. It's just much more organic and real than just being like, oh, you're an investor, like invest in me. And they're like, dude, I do life science. Like you're doing something else. You know what I mean? So there's tact that's involved. Understand that these guys are here to support you and accelerate the growth of not just this industry, but like, the extension of our civilization. I know it's heady, but it's fucking true if you think about it. But you need to like do your homework and be respectful of that too, and really come in with a true partner mindset. And then that'll increase your chances of them just even wanting to help, even if it's not a fit. Because guess what? I'll bet you that Andy and Edgar know a bunch of other investors. It's just is what it is, right? Anyway, all right, rock and roll. I hope today's session was hyper useful for everyone. I learned a lot, so if that's the case, I hope you guys learned a ton too. Really excited to learn from Edgar and Andy. You guys are awesome. Keep fighting the good fight, doing what you guys are doing. I'll sync with you guys individually because I just want you guys in my lives. But yeah, go forth. Happy building. Keep doing what you're doing. Hit us up anytime, and we'll catch you on the flip.